Hey everyone. We're just gonna wait a few more minutes for more people to stream in. Today's session will be on Japanese candlestick patterns. This is a beginner educational series brought to you by Vantage. So just a few more moments before we begin. If you have any questions on today's topic as we go along, feel free to put your questions in the chat. And as we go along, if I see any of these questions, I'll try and answer them to the best of my abilities. Okay. Okay, I think I'll just go ahead and begin. This session will be recorded, so if you guys want to review this webinar, it's on the Vantage website, and you're able to view all of the previous webinars as well. Okay, today's session is on Japanese candlestick patterns. I think this is one of the most common technical aspects of technical analysis. My name is Sherman, and I'm an FX strategist with Zeta Labs. And today's session is actually in collaboration with Vantage to bring to you this series of these educational webinars. Okay, so before we begin, I just want to highlight that most of these materials that we go through today, only use them if they're in line with your own trading objectives. Some of this technical analysis is based on the experience and opinions of my own personal experience. So do ensure that they're in line with your own trading objectives before using them in your trading. Okay. So today's agenda is pretty straightforward. I'm just going to go through the basics of Japanese candlesticks. We go through some of the different types of candlestick patterns, and then we want to see how we can actually use them in an actual scenario or in actual technical analysis. Again, my focus is also on algorithmic trading, and we use a lot of these data points used to draw Japanese candlesticks in our algorithms. And basically, they are data points that can help us identify key areas to buy and sell. And I'll most likely dive into it deeper later in this session. Okay. So in Japanese, bullish. Well, let's start with a bullish candlestick, or maybe in general, candlestick. Is made up of 4 key data points. They are basically the high, close, open, low. Okay, so it's just these 4 data points that makes up these candlesticks. A candlestick does not show the volume within this candle. It doesn't show you the momentum, because momentum is made up of price movement plus volume, so it doesn't show you the volume within a candlestick. But that is something that we can infer in very liquid markets like the foreign exchange markets. In other less liquid markets, it might not be the case. So do ensure that when you're actually using the candlesticks to do your technical analysis, do ensure that the market they are in, the instruments that you're trading, they are very liquid. So without looking at volume, the candlestick itself can actually tell you a lot about where the market is going to move. Okay. So again, 4 data points: open, high, low, close is basically the 4 data points that draws this on our chart. Okay. The difference between the open and close forms the body of the candle. So in essentially, if the open is below your close, you form a green candle, or depending on the chart colors that you have placed, in most cases it's green in color. It forms the body of the chart. So in certain scenarios, there'll be these are the candlestick wicks. Some people might call it the shadow. And basically, essentially, what we're actually looking at, if this is on a higher time frame, what we are basically looking at is basically an up candle, and then a sorry, let me just erase this a little. Okay, for a bullish candle, I'm just going to use black. For a bullish candlestick on a lower time frame, what you're seeing here is that it opens, it goes down, and then it moves up, and then it comes down again. So candlesticks are fractal in nature. So basically, when you look at different time frames, they tell you different stories. A general rule of thumb is to look at higher time frames candlesticks, which is the 4-hour, daily, or weekly candlesticks, to sort of determine the true direction of the candles. Okay, so this is a representation of a bullish candle. The opposite is true for a bearish candle. So if the open is here, and basically there's a price move down towards this level, basically prices at the open move up, and then the second candle on a lower time frame move down, and then it move up to form this wick again. Okay, we will talk about this candle, which provides a high probability trade setup. Whenever you see such a candle, it's called a engulfing candle. Depending on the direction it moves, it can be a bearish engulfing or a bullish engulfing. Okay, so in most charts, if you're using TradingView or MetaTrader, basically the body is colored, so we can actually see this as a bearish candle depending on the color of the body. Okay, so different types of candlestick patterns. I think there are many names to the different types of candlesticks. I think the key thing is to understand what each of these mean. What does it mean when there is a wick? What does it mean when there's a small body? What does it mean when there is just a big body without any wicks? Okay, so just to go through some of these examples first. So there's this, some people might call it the white Marubozu candle. If it's paired together with a smaller candle here and it moves upwards, this is a bullish engulfing candle. So the condition of this candle, whenever there's a big body without any wicks, means that there is no indecisive move in this particular candlestick. Whenever there's a candlestick wick, it shows that there is an exchange between buyers and sellers, and it usually shows indecisive moves within this candlestick. Okay, so when you look at a body without any candlestick wick, it's basically a very decisive move to the upside, indicating a very bullish move. Okay, so long white body with no shadows, as opposed to the hammer candlestick. Okay, this strong wick, right, on a lower time frame, right, it basically shows that price started. This is our open, right? This is our high and our close, and this is our low. So what happens here was that there was a strong bearish candle, right, a black candle here, and basically the buyers were able to absorb all of these sell orders to push price up all the way to the top before coming down again. Okay. Oh no, there is no coming down here. Okay. So basically, in this scenario, if you were to go down into a lower time frame, there was initially strong selling pressure coming down, and then all of this selling pressure were wiped out by buyers pushing the price up. And so this candle itself is also a white marubozu in the lower time frame, and basically it shows that prices have moved up. Okay, this is usually seen during a downtrend, and it gives us a signal reversal. Okay, there is a long lower shadows with a smaller body, and usually if you want to have a general rule of thumb, the lower shadow is at least 2 times that of the body. Okay, and the last one here, which is the inverted hammer. Again, not going down into the technical setups, but basically this on the lower time frame shows that there was first a, so again, this is the open, this is the close, this is the low, this is the high. Okay, so basically when we see such a pattern, this can sometimes happen in an uptrend, which shows a reversal and is a bearish candlestick. But during a downtrend, right, when prices are basically on a lower time frame, when it opens, basically what is happening is it opens up and it forms the high, right? The open is high, and then prices came back down to retest a certain level of support on the lower time frame before moving upwards. So usually we'll see something like that, and then this inverted hammer happens, right? Right, and basically this was to retest another support, and then it goes up. So this is also considered a bullish candlestick pattern. Okay, so if we were to combine candlesticks together, again, this will be seen on the lower time frames. When you have 2 candles side by side, and this is basically a form of the white marubozu candle, right? Basically when when the most recent candle engulfs, which is bigger than the previous candle, and usually it might be 2 to 3 times the size of this candle, it just shows strong buying pressure moving upwards, and therefore there might be a chance where you retest and move up even higher. Okay, tweezer bottoms, this is sort of like a very strong reversal trend, right? So whenever it comes to this point, buyers tries to push up, right? Push price up, and then sellers maintain the downward pressure, and again buyers push. And again, I'd like to highlight a point on candlestick wicks. Again, on the first slide that we saw, wicks or the shadow of the candle usually shows some form of absorption. So an absorption is basically orders that are entered in the market, limit orders that enter in the market, that are used to absorb the trades from the opposing side. So what happens is that limit orders were placed at multiple levels on this level, forming the support. And whenever the sellers comes in here, the buy trades overwhelm the sellers and are able to push the price up. So say, for example, in terms of volume, we can infer this in the very liquid markets. in terms of volume, if I have 100 cells here, right? For me to form such a pattern here, right? For it to stop, so for it to sell up to this point, I need 100 buys to meet the sell trades. And for me to push price up, I would need to have more than 100 buys. So in a sense, when we see a candlestick wick like this, basically it shows that buys are more than, the volume of buys are more than sells. And we can basically infer that prices at this level, there are a lot of buyers coming in from buying volume at this level. And we are able to basically look for a reversal pattern to take a buy trade. Okay, again, here we see a morning star pattern. A morning star pattern is a very strong reversal pattern as well. Basically, it tells us sellers came in, buyers were not ready to push price back up or to absorb the sells. And so basically sellers are selling without any resistance from buyers. But once we come to this point, this is basically the decision candle where buyers and sellers, the demand in terms of volume, sellers coming in from here, buyers coming from here, and this price point is where most of the exchange taking place. Okay, so say for example, this is, let's say it's 1.01. This is where buyers and sellers are exchanging hands without a very decisive move, right? So how do we decide if this is a reversal? The next candle will tell us who has the bigger volume, and in this case, the buyers have the bigger volume. For a buy trade, you can actually take the open of the next candle due to this volume of this buy volume coming in. You can actually take enter the next trade for the next white candle, or you can actually wait for it to retrace. If it is a high time frame, wait for it to retrace to the discount level 50% before buying up again. Okay, so this are kind of like some of the bullish patterns that we see. Again, if I'm going too quick, if I'm going too fast, or if anything is too confusing, or if you have any questions on candlestick patterns, feel free to put it in the chat, and then we can go through them together. Okay, so basically, this is a continuation of the previous pattern, right? So if we have a morning star, right? This is a black candle. This is a decision candle, and what happens is that the next candle is a bullish candle, and it continue. There's a continuation of candles, white candles moving upwards. Then basically we can see that the buy volume has come in without any resistance from sellers. So sellers are not coming in to absorb all of these orders, and so at every price point here, there are no sellers, and basically that is why the chart is printing such a white candle, pushing, showing that the prices have moved up, and buyers are coming in strongly, because we know that as prices move up, it's getting more expensive for buyers to purchase, but buyers are still coming into the market to buy at all these levels. It means that there is strong buying pressure, and it is safe for us to actually follow this trend and buy for the move upwards. Okay, so the first candle is bullish, second candle is larger than the first, and close to near its open, and then the third candle is also about the same size as the second candle, and it's moving upwards. And we can see the buy volume, or at least the buy volume, or the buyers coming in with sufficient and consistent momentum towards the upside. Okay, for the 3 inside out, this is a very good reversal pattern that we can actually use to whether or not I'll be scripting our algorithm, or when we're looking at the chart. On the H4 and the D1, there is something called fractal points. Okay, it's made up, how the fractal points are created is made up of 3 candles, and basically this middle candle has to form the lowest point, And on the charts, usually you'll see an arrow drawn when you put in the fractals candle. Okay, what this actually means, if you subscribe to the smart money concepts, or if you just look purely on price action, right? This is basically the sort of what they call a change of character, right? The chalk point here. So basically comes down. This was the last bearish candle, and then this was the candle that broke the last point, and they call it the change of character, or basically, it's just basically price has pushed past the highs of the previous two candles, and what we're looking for is a continuation of some sort of break of structure and then buying up. So different candlesticks, the newer smart money concepts, they're basically telling you the same thing. It's just different people telling you the same occurrence on the charts. So whether or not you subscribe to the smart money concepts, or you just look at pure price action on candlesticks, they basically tell you the same thing when trading. And this also means that it's consistent, so that most of the trades are not based off random occurrences of candlesticks, but rather every time something like this happens, you know what is the setup, whether to buy or to sell, what's the direction to take whenever this such patterns happen. Okay. This part is about indecisive candlesticks. Indecisive candlesticks usually, again, I've also mentioned earlier, they have a lot of candlestick wicks, or the shadows of the candlestick. And basically this just tells us that this price point here, this middle price point, is the price point, average price point or median price point, where buyers and sellers are willing to exchange hands. Buyers are not willing to buy above this price, and sellers are not willing to sell below this price. And so what happens is that you need to see sufficient volume on the next candle to tell you where this direction is going. So if, let's say, there's a big bullish candle, or if there's a big bearish candle, it means that the sellers, if there's a big black candle, basically the buyers have removed their buy orders, and the sellers have no resistance in pushing price down lower. And then if it's a white candle, then basically you know that sellers have removed their volume, sell volume here, and buyers are able to push the price up. Okay, usually this happens during events, your CPI data, your NFPs, right? Usually maybe like 15 minutes before, 30 minutes before, you have all these sort of candlesticks, because no one knows where it's going. And then once that next candle appears, right, you're able to have that clear idea of where the market will be heading to. Okay, so this will be the same with same as the bullish candlestick. It's just that it's the opposite. So we have the white Marubozu just now. Now this is the black Marubozu. The only difference would be that the open is up here, and then price push down to this, and it closes below. Same thing for your hangman and your shooting star. Okay, these are bearish candlestick patterns. Again, just by looking at this point in time, right? You have a sort of selling pressure here, right? And then for this candlestick, you have buying pressure coming up, but an equal and stronger sell volume coming down to push to close the candle below the open. Okay, so this wick by itself shows that it is a strong bullish push up by buyers. But the fact that it is met with an equal or more sell volume to close this candle below the open tells us that this is a bearish pattern. And again, this is a no-brainer. This is basically your sell coming down, and your sellers were able to have an edge over the buyers to close below your open. Okay. Yeah, just now we have the 3 white soldiers, now we have the 3 black crows. Okay, so again, as long as the body is black, going downwards, getting bigger, you basically just indicates stronger volume moving down to the downside. Okay, and this as well is a reversal pattern, right? And these lines that I've drawn is basically a trend that happens before and after. So this was the end of the uptrend, came to this price point, and somehow, right, sellers already prepared to sell at this point to absorb all the buy trades here. And at this point in time, right, basically there are just insufficient buyers or buying volume at this point in time to keep the price up or push it even higher. And so sellers do not have any resistance pushing price down to a lower end. Okay. So let's combine. I think this is the last part of the today's session, and we're just going to combine some of these patterns that we have talked about earlier in a given chart example. So pound USD H4. In most cases, when you're looking at candlesticks, right, if you're not scalping, you're looking for swing trades or directional trades, it's better to use higher time frame. My personal favorite is the H4 D1 day one candlesticks. So do ensure that you're using on higher time frames to ensure that you're in a better swing trade as compared to a scalp trade. Okay, so this is basically a downtrend that we can see here, right? A downtrend, and we're basically looking for sells. This rejection of this level here gives us a very nice support, right? And as price breaks below this forms, this support has turned into our resistance. Okay, so let's look at some of the key candles here. So at this point in time, you can see a few points. Let me just erase this. I mean, these candlestick patterns are strewn all over this chart, right? So yes, you see this 3 black crows, right? 3 candlesticks, which begin the start of and it broke this support. So you know that selling at this point in time, you're actually very safe, right? As it comes down here, from strong black candles to candlesticks with a lot of wicks, we know that buyers are coming in to absorb a lot of these trades. And at some point, there was indecisive move, and it could have been coming. It could have come down all the way here again, but buyers were able to absorb all of this sell pressure and push price up. And so, if let's say we were to compare just maybe as a mini case study, what's the difference between this candles here and this candles here? So this small white candles with a lot of wicks, and if it's a white candle with a lot of shadow, right, it shows that buyers are they're not really very strong in the push up, because sellers are still able to come in to push keep the price low. And if you look at this candlestick here with a strong wick upwards versus some of these candlesticks here with longer wicks above, right, you know that this is a stronger push up versus this channel here. Okay, and again, with a lot of these white candles, right, a lot of these strong bullish white candles, basically it's whenever you see these white candles, this is the primary trend, right? So we are looking for sells, but whenever there's a reversal, right, this will be your scalping opportunity for the secondary trend. Right, whenever there is a white candle, you want to push up, retest your FIBO 61.8% or 72.8%, and then buy up again. And when do we know that this is the end of the secondary trend, right? At some point, right, there will be a bearish engulfing candle pushing price down. We can choose to exit here, right, or wait for a retest up to this point again and exit our position. For this example, there wasn't a retest, so this black bearish candle would have been an indication that again, this is a bearish engulfing candle. It would have stated that this is the end of this move up, right? We are looking for a retest to the 61.8, 72.6, and then try to push price up even higher. Okay. But again, when it comes to this point, we have a bearish engulfing again. So it means that this is probably the end of the trade here. You have exited at break even. There is the secondary trend here, and then we have this move. We have this diagonal breakdown, and whenever there's a breakdown, this would have been the order block. And given that this was the order block, you can see prices rejecting here. So again, just to talk about the traders' psychology when it comes to this point, we see this secondary trend moving up, right? And the expectation when it comes back here will be for us to actually buy up to a higher high. Okay, but because of this bearish engulfing that pushes it back here, two things happen at this point in time. Okay, the first thing is that the buyers were stopped up. That means as it moved up, their stop loss were placed at this level, right? And as when the sellers came in to trigger all of these stop losses are basically your market sells. And how do we know that the stop losses were triggered? Basically, it's a cascading of sell orders, which can be shown by all of these big black bearish candles. Okay, if there are no cascading of sell orders, right? Basically, what will happen is an absorption of your sell orders, and basically price will just range around this level. But once you see a black bearish candle, this is the triggering of the cascading of your stop losses, and your market sell orders will push price below. So the second group of buyers without their stop losses are still in this buy position. They might be layering a few layers, right? They're looking at all of this support and saying, okay, let's do my first buy here, second buy here, third buy here, fourth buy here, whatsoever, right? But once they see such a bearish candle, right, and they're coming in with all of these new buys, right? These are your new support, new support, new support. With all these new buys, as prices reach this area again, once we see all of these wicks and the bearish engulfing candles, what it signifies to us is that those buyers who were trapped up here, they got in, they layered their second buys, their third buys here, and push prices back up here. They're getting out of the market, which is indicated by the strong candlestick wicks and the bearish candles, right? The black bearish candles. And when buyers exit the market, it means that sellers will push prices down without any resistance. So there were multiple times where it hit this level, came down, hit this level again, it came down, and basically every time it hits this level, it's a confirmation for us to tell us that buyers are exiting the market. New sellers have not entered the market. Why do we know that? It's because if new sellers enter the market, the volume from buyers exiting the market and for sellers to enter the market will basically show us a strong downwards move to continue this pattern, right? But this whole area is basically just telling us there is sufficient sell volume to keep this resistance level, but there isn't sufficient sell volume to push price down lower. And of course, multiple buyers are still coming in to absorb at this level, right? So this basically forms a range. And at some point in time, basically there's just insufficient buyers in the market, and price will break below this level. Right? Again, when sellers come into this market, if you were to see sell volume coming into this market, we will probably see a strong downwards move. But again, we see a push up towards this level, probably the last defense by the buyers to actually enter the market to get their whole layer out in profit. And this white bearish candle tells us that there might be a chance of a reversal, a double bottom reversal, right? But again, when we revisit this level again, we are met with resistance. Okay, so at this point in time, if you're still a buyer, right, basically you're just gonna you're already very late and you're basically going to lose money, right? So there should not be any bias here. This was the last chance for buyers to get up due to the fact that this previous zone here, this price point that we were fighting for at this price point, sellers were just pushing the price down, buyers were exiting the market. This was the last chance for you to exit the market. And this sell volume basically tells us that, you know, sellers are beginning to come in, right? And this forms the new range, right? And then you probably would not be selling here because of this move here, right? You have already started selling here, here, here. So this is basically, it's not why this happened. It's just basically when it will actually happen, right? It could have broken down here, it could have broken down here, but it depends on the time frame, maybe events, maybe sell volumes were insufficient at this point in time. Might be affected by news. Again, if you're entering at this point in time, right, you're not late, just that there are many opportunities for you to enter based off these candlesticks. And then once it broke past this level, there's no reason for you to actually be buying this this pattern here. Okay, and so it goes down even further. Okay, so this kind of like the breakdown if you were to watch the markets every day, and you know you're following the movements by, I mean, the candlesticks would just tell you the movements in the market without even looking at events or you know, like looking at very complex structures. Just looking at candlestick patterns, you can identify key areas of support and resistance, and you know, like where are the areas where buyers and sellers were fighting, how many at which point in time were buyers trying to you know, push the price back up, and then they were met with resistance. And because the market is very liquid, especially pound dollar, euro dollar, gold, is very liquid. There is no one player that, it's hard to say that it's due to manipulation. It's usually a consensus of the market that's basically printing all of these candles. And if you're able to identify these patterns here, you know, you'll be able to catch the strong move down, all these strong moves down. Okay, so I guess for that, we've come to the end of the candlesticks pattern educational series. If you have any questions, feel free to email us. Otherwise, all of these webinars can be found on the Vantage website. Basically, Vantage website, vantagemarket.com/webinars. All of these recordings are posted there, so you can go back and see some of these webinars. And if you guys do not have any questions, I hope this was useful for you guys, and we'll see you again on the next educational series. All right, thank you guys.